welcome to another episode of Banking on Information. Today, my guest is Landon Glenn, who is CEO and founder of ASA. Welcome to the podcast, Landon.
Thanks for having me, Ricker. It's good to be here.
We always start with that very important question that I ask everyone. Why, Landon, do you do what you do?
I am driven to help consumers take control of their financial lives. So it all comes down to financial empowerment.
So helping consumers take control of their financial lives and empowering them, where did that come from?
It came from at a young age, seeing things in my personal life and being impacted in ways that caused me to do things differently and think about them. And as I grew, when I was 18, I had an older brother that helped me get my first credit card, and I didn't even know what it was. But that decision changed my trajectory and helped me to be able to buy my first piece of real estate when I was 22 years old and get into real estate investing. And having that mentor, having somebody that can guide you or some sort of tool makes a big difference. And so my most recent company is called Banzai. It's the largest financial literacy company in the country. It's in 70% of schools in America. And, ASA is really the next step in that, in helping people to have the tools to manage their finances so everyone can have that mentor.
Now that is amazing backstory, and that really explains your why. You were looking for that yourself. You were looking for a mentor. You found one and then realized how powerful that was. And now you want to pay it forward and help other people take control of their financial lives. That's a great why to start this conversation from. Now, tell us at ASA, what is the number one use case that you help people solve for?
We are an embedded finance platform that helps consumers to be able to connect their entire financial world seamlessly in one place, and helps them to be able to understand and be able to get the help they need in their finances for things they may not even realize. So if we're doing our job right, people are going to be making better decisions automatically. They're going to have better opportunities. They're going to be doing better financially.
So embedded finance solution. So what does that mean in layman's terms, or what practically does that mean for the consumer?
Yeah, we're an app inside of an app. So we're part of the bank app. So whatever bank or credit union you use, you would have a button, you'd be able to hit it, and it would open ASA Vault. And then this would be your entire financial world. So I've got 12 different fintechs and apps and credit cards on my phone, and I still have no idea what happened last week because it's so fragmented. So what ASA allows you to do is to bring them all into one single place seamlessly, but then also privately and securely, and then allows you to be able to use AI, machine learning, and combine that data with other technology solutions in a private, secure way. So it basically gives you a vault where you have your whole financial world seamlessly connected to anything that you want through your trusted credit union, your trusted bank.
And that's an important point. You're saying in the app of the financial institution that you already trust.
Correct.
ABC Bank, just making an example, not naming any names, but like an ABC Bank or XYZ Credit Union, you go into their app and then the vault is in there like an app store. Is that how you can compare it?
Yeah, so we have a lot of the basic features you'd get through like a Quicken or Mint or Rocket Money type thing. And then we have an app store of solutions where we have pre-vetted, pre-connected tools, but it essentially replaces open banking. So instead of the fintech having banking as a service where they would get their own cards and loans and your money would go into the fintech and all the risk, as we saw with the Synapse failure and the money lost, your money stays at your credit union, but whatever card is in your wallet could literally become like an Acorns card or like all the different fintechs out there. There's apps for different use cases, and we layer those into your existing checking accounts and cards through whatever bank or credit union you use.
No, that sounds very powerful and very easy for people that have already selected their financial institution and say, yes, I want something extra, but I already trust this one organization. So if I can get it through them, through the app that I already know, that's pretty powerful. Now, how do your customers, so banks and credit unions that use that solution, and maybe also hear from end consumers, how do they talk about it when this works successfully?
Yeah, it's increasing relevancy. So engagement, time in digital. Consumers need a lot of things. And
Yep.
if they have tools through their trusted credit union where, for example, we could analyze and see that they've paid their rent on time for the last two
Hmm.
years and say, hey, we have a solution already integrated that'll report your rent on
Yep.
your credit report and you'll get a better rate on your car loan.
Yep.
Or, we have a tool in our digital app that replaces TurboTax completely to file your state and federal taxes. It's already integrated, direct integration to the IRS. So it removes friction of the consumer having to go through a 10 or 20-minute sign up process, putting their name and social into all these other websites, putting their credit
Yep.
card and data on the internet. And it allows them to sign up for things very easy, very simple, and
Yep.
sometimes with one click. And so
Right.
it gives them access to the tools they need to live their best lives.
So easy, easy use, extra value for the end consumer, but also relevance for the credit union that can now offer all these new things and new fintech offerings to their member base where they otherwise would have to go and look for it themselves.
Absolutely. Yeah. For the financial institutions, they want to stay up to speed with the latest technology and trends.
Yep.
And then for the fintechs, they're looking for a customer acquisition engine, distribution. And for the consumers, they get increased privacy, security, and reduced friction.
That is very powerful. It works for both the financial institution and the end consumer. That it seems like a win-win. Now, I like to do this thing called futures thinking, where we think about a possible future. So we don't know what the future is going to hold. We don't even know what's going to happen tomorrow, but we're going to try to envision a possible future 10 years out. So we're in 2035. What does the banking landscape look like? What do credit unions look like? What do fintechs look like? What are your thoughts on that 2035?
Yeah, in 2035, you'll be able to use your KYC verified bank identity to log into any website on the internet to do
Hmm.
business with any company,
Hmm.
and you'll be able to do it completely anonymous and with zero digital footprint. So you'll be able to log in, like think log in with Apple or Google or Facebook. But you think of all the fraud on Facebook Marketplace, they don't KYC verify. Just because you have an iTunes account doesn't mean you're real. So
Right?
credit unions and banks have a constant KYC verification, but combining that identity to create trust on the internet where you can engage in commerce, but then bringing with that login
Hmm.
all of your data connections, payment functionality, billing functionality, all tokenized. So imagine you go to a website and you're able to click and sign up essentially with single sign-on
Yeah.
within a few seconds without having to create an account. And you get to choose which accounts to share, what to link up. You get to do a checkout that's anonymous, and the card is charged and paid through a clearing account. It's completely different than the world today, where today you're giving your information to hundreds of companies sometimes. They have your
Yeah.
credit card numbers, they have your emails. So it's going to be a world where you'll have a virtual email, a handle,
Yeah.
tokenization. When you go to buy a piece of property, you won't have
Right.
to tell them who you are. You can do a zero knowledge proof and prove that you have the cash in escrow to fund the entire purchase
Yeah.
and make an offer that is completely unbiased, and the seller would be able to sell the property and get
Yeah.
paid seamlessly. And so removing a lot of the friction from other things, like in real estate, all the loans that I've had to go through, that process is a nightmare. All the paperwork you fill out over and over and over again for no good reason. You'll
Right.
have a digital financial statement that's verifiable, that'll prove your cash flow, that'll
Yeah.
prove your ability to pay, and you'll be able to get those loans in a fraction of the time, and in some cases, one click.
Wow. That does sound like a very interesting future where basically your trusted financial institution is basically the gateway to everything. They can basically let you take care of a lot of things financially without having to share again and again all that data. Because we've all seen how, unfortunately, there's lots of breaches. So every time you again share that data, there's another risk that they're going to lose it. That is very powerful, and I think a lot of people are looking forward to that. And might be a little bit tired of having to share their data every time again, and they can pick that one trusted partner. That sounds like a very interesting future. Now, if that is the future in 2035, what do we need to do today to start getting ready for that?
Well, we've already signed our first enterprise contract with a core banking provider and digital banking providers, the fifth largest credit union core. And
Yeah.
we're rolling out 300 credit unions, 1.5 million users.
Wow.
We've got a pilot signed with one that has 4 times as many digital banking users. And so
Yeah.
we're hoping that just by getting the technology in the hands of people and showing them a better way, a more private, a more secure, and an easier way to engage in commerce,
Yeah.
that we can get this done before 2035. The only thing I'd change, I'd like to have it by 2030. So I think the consumers need more, and there's so much that we can do with what we're putting together.
I like that ambition to say, hey, look, that this is probably where we should be, or where we're going to be 10 years from now, but I want to be there 5 years from now. I like that you're not going to just take this like lying down. You're actually going to try to beat the clock. That's amazing. What do you think are the elements that will determine how quickly this goes? So you're saying consumer adoption. Are there any other things that will play into how, if we make it 2030 or 2035?
I mean, with any platform, especially one with different participants in many different areas, the platform can really take off quickly once the adoption and the benefit is evident. And so
Yep.
having this first major rollout and having the first 300 credit unions turn it on, that's going to lead to people talking to their friends and saying, hey, I can do this with my
Yeah.
bank or credit union. Oh, where'd you get that? Or how are you doing that so easily? Now that's going to lead to increased engagement, more people asking for it. And then on the other side, with this first 1.5 million users, there's a
Yep.
lot of businesses and tech companies that want access to that user base as a distribution channel. So that increases the value of people adopting a particular functionality for single sign-on. You look at
Right.
Google or Apple or Facebook, they have a lot of users, and
Yep.
that's the value of their login is a wide user base to add convenience. But when you factor in all the things that the bank brings to the table with KYC and trust and security and access to
Yep.
money to do all these things, I think that they're much better positioned to
Hmm.
be that source of technology. They just haven't had the tech stack to be able to offer that to their consumers. And so
Yep.
we're not doing it on a one by one basis with, one bank at a time. We're looking for
Yep.
enterprise partnerships,
Right.
reaching millions of people at a time with just an app update. And then everybody
Yep.
has it on their bank app with
Yep.
just one update on Apple. And so from that standpoint, it's really just getting as many enterprise contracts signed as fast as we can.
I'm actually quite excited about this because this will give financial institutions a fighting chance against big tech. Because obviously, Apple and Google are also offering things like this, or encroaching way deeper into financial services. So this does seem to be like something that can really help the more quote unquote traditional financial institutions actually catch up.
Yeah, we actually beat Apple by 3 months on our first patent. And so we're very much in the space trying to bring some of the biggest brand solutions and companies equivalent technology, in some cases that can do more with bearer tokens and managed identities. Just what I mean
Yep.
by that is the ability to be able to control what is permission to every single login. Like how
Right.
many times do you pull up an app and it's
Hmm.
got 3 or 4 different logins and you're like, did I use Facebook or Google or Apple? You click on the wrong one and you're like, where's my Taco Bell rewards? I can't get my free chalupa. This is terrible. It ruins your day. None of them are differentiated. They're convenient. It's good tech, but there's no differentiator. And what we
Yep.
can bring to the table in partnership with your trusted bank or credit union is that login
Yep.
plus everything that the bank can do. The ability to move
Right.
money, do payments, get loans, connect data, verify KYC, prove that you're 18, all anonymously. And those are things that you just can't do through Facebook the same way.
Okay. No, that sounds amazing. That's probably a great point to wrap this up on. Thank you very much, Landon, for being on the podcast.
Yeah, thank you. It was great.
And until next time, choose to be curious.